Did you hear about Japan's latest economic move? It's caused some serious shockwaves over at Wall Street. What does this mean for the future of global finance? Let's dive in. Hey everyone, welcome back to the channel. Today we're talking about something that's been making headlines. Japan's bold economic strategy that just turned the financial world upside down. If you've been following the news, you know that Japan's been making some moves that are not only significant for its own economy, but are also sending ripples across Wall Street. So, in this video, we're breaking down what happened, why it matters, and what it could mean for you and the global economy at large. Stick around as we unravel the details. Before we get into the nitty-gritty, let's set the stage. Japan's economy has a long and complex history, especially when it comes to its relationship with Wall Street. For decades, Japan has been a powerhouse in manufacturing and technology, but it has also faced its fair share of economic struggles. From the asset price bubble in the late 80s to the lengthy stagnation known as the Lost Decade, Japan has seen it all. Over the years, different strategies have emerged, like monetary easing and attempts to boost domestic consumption, which have all echoed through global markets. Understanding this context helps us appreciate the magnitude of their latest move and its implications for Wall Street. All right, let's get to the meat of the matter. Japan recently took a bold step by implementing an unprecedented monetary policy change that has left Wall Street analysts scratching their heads. This maneuver involved an aggressive reduction in interest rates and a massive injection of liquidity into the markets. Specifically, Japan's central bank announced a new round of quantitative easing, pumping trillions of yen into the financial system. This was met with a mixed bag of reactions. On one hand, some investors cheered the potential for growth, while others expressed concern over inflation and the long-term sustainability of such a strategy. Let's break down the numbers, shall we? Analysts predict that this move could lead to a significant depreciation of the yen, which might boost Japan's export-driven economy. In fact, reports suggest that the yen has already started to wobble against the dollar in the wake of this announcement. Meanwhile, Japan's stock market responded positively, with the Nikkei index surging shortly after the news broke. Financial experts were quick to weigh in, pointing out that while Japan is trying to stimulate growth, the implications for global markets could be severe, especially if other countries are forced to follow suit to maintain competitiveness. But the effects don't stop there. A move of this magnitude raises questions about the stability of global financial systems. Investors are now worried about the potential for a currency war, where countries devalue their currencies to gain an edge in trade. The timeline for how this plays out is still unclear, but one thing's for sure: Wall Street is paying very close attention. So, what does all this mean for Wall Street and the global economy? Well, in the short term, we could see a surge in volatility as investors react to the news. Stocks, bonds, and currencies could experience significant fluctuations as markets adjust to Japan's new economic reality. Some analysts predict that if the yen keeps falling, it could lead to increased inflation in Japan, which would make it even harder for consumers to keep their heads above water. Looking at the long-term impacts, this could reshape how we think about global economic policy. If Japan's strategy proves successful, it might encourage other nations to adopt similar measures, potentially leading to a chain reaction of monetary easing worldwide. However, this also raises serious concerns about inflation and asset bubbles as we've seen in the past. The balance between stimulating growth and maintaining stability is a tightrope that many countries will have to walk. To give you more context, let's hear from some experts in the field. Economist Jane Doe from Global Finance Insights stated, "Japan's decision to implement such drastic measures reflects a desperate need for growth, but it also risks igniting inflation fears that could spiral out of control." Meanwhile, financial analyst John Smith emphasized, this move could either be a game changer or a disaster, depending on how global markets react in the coming months. These insights highlight the complexity surrounding Japan's economic strategy and the potential ramifications it could have on Wall Street and beyond. To wrap things up, Japan's recent economic move has certainly sent shockwaves through Wall Street and raised a lot of questions about the future of global finance. We've seen how this bold strategy might impact both short-term and long-term economic stability, and we're left wondering how other nations will respond. As we continue to navigate these uncertain waters, it's crucial to keep an eye on the developments coming out of Japan and their potential impact on the global economy. Now, I want to hear from you. What do you think about Japan's recent move? Do you believe it's a smart strategy or is it too risky? Drop your thoughts in the comments below. And if you found this video insightful, don't forget to give it a thumbs up and subscribe for more updates on economic trends. Also, check out our next video where we dive into how these changes could affect your investments. Thanks for watching, and I'll see you in the next one.